Hey guys, welcome back to the channel. We've now made it to 6 months since the all-time high. It is day 183 since the previous old all-time high. Bitcoin is up 18% from the low and down roughly 21% from the top. So we're getting very close to the halfway point between this correction. But even with the worst potentially behind us, we are still hearing about recession fears and markets that must collapse in 2024. Now, if you are a regular viewer of the channel, thanks very much. Hit that like button like you do on every single video. And to the new guys, thanks again for joining us here. Subscribe to the channel if you want to see more of your home of macro cycle analysis with me, Jason Pizzino. We cover Bitcoin, cryptos, the stock markets, and the real estate cycle. Today's video, I've got a lot to get through in terms of the recession fears, but more importantly, new all-time highs just around the corner. And as we've been following with Bitcoin since the top, it seems like it's a matter of time now until Bitcoin does get back to new, fresh all-time highs. We have a sale going on right now for our new TIA indicator suite that is launched. Check it out, subscribe to the free report, and you will receive that today. I'm going to start it off with this particular quote. I want to make life really easy for ourselves here. Another great one from Warren Buffett. In previous videos and quotes, he's given us sex advice, he's given us investment advice. Now he's giving us some real simple, logical advice. I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over. Basically, let's make life very simple for ourselves and very easy for ourselves when it comes to the markets. The US stock market is up again. It has bounced off its 50% level. So this is our GAN 50%. Really important tool for you to be able to use on all of your charts. It helps with trading, basically understanding weakness and strength. Above the 50%, typically more strength. Below the 50%, a little more weakness there. Now, in terms of the invalidation, basically the whole macro bull market thesis that we've been following here now for years and years is we would have to see the price for the stock markets come back and close on a macro scale here, on a long-term scale, like a monthly, underneath their previous all-time highs. So for now, there's really not too much fear of that happening, especially as it continues to put in higher lows on extreme fear. Middle East conflicts, Japanese yen carry trade crashes, and the markets have bounced very hard away from that across the board, as we've seen now with even new all-time highs happening around the world. And at each of these significant corrections, there's always something fearful to worry about. So in terms of the S&P 500 and where it sits in regards to its all-time high, down now just 1.3% from a new all-time high after the Japanese yen carry trade dropped it back around 9.7%. So this is just looking at the SPX here for the futures market. Going from that top, just before we got another signal to say that the market was going to be down, it did hit 10.5% top to bottom. Now we got our signal there to tell us, well, it's probably unlikely we're going to rush back to a new all-time high. We're at day 59 from that peak, and previous corrections have lasted 44 days, and the largest one going back to 2023 was 137 days. Now from this point, what I suspect will happen is once we start to break out of these tops, is we're probably going to go on a pretty significant run, even though we've just heard all about the recession and why we're going to get interest rate cuts, which might in fact happen. But all this sort of stuff could spur the markets on even further again. Now, I just want to draw our attention to what's happened over, I guess, this entire bull market for the stock market since 2009 and how this keeps repeating. Eventually it won't, and there will be a correction, but obviously we're going to continue to follow that here on the channel. Remembering back to 2022, we had the recession, inflation fears, interest rate hikes. We're going to fear the market that it had to collapse. It didn't. It did the exact opposite. And there was an economic collapse just around the corner. None of that happened. We ran to new all-time highs basically across the board. Almost everywhere around the world, their stock markets went to new all-time highs. Now we're coming into another election. I think everyone's pretty well aware of that. You can see the emotions are very high. Everyone's got their favorite color that they vote for. And apart from that, what's happened on the last, well, going throughout this entire bull market, you get a breakout to a new all-time high, which is this red arrow here. You got the election, which is the bottom arrow here, and then it just leads to a rampaging bull market. And basically, there's a different reason why each of those bull markets have occurred. This time around, probably something different. Interest rate cuts might spur on the market. More money flowing in. Obviously, we've seen the M2 money supply start to increase again. So they're starting to print again. China's printing again. And so you're seeing a lot more activity happen in the economy, which the stock markets had forecasted 6, 12, 18 months ago. What the hell am I talking about? Look at October and September of 2022. That's actually 24 months ago. The bottom was in for the stock market. And the stock markets look forward. They're looking at what they think is going to happen in the economy, and they start to price that in before it happens in the economy. The same way that they'll price in the peak and then the collapse before it happens in the economy. And yeah, we're starting to see some signs of the economy slowing down, but it seems like the reasons and the data pointing to more upside before that downside seems to be stronger for the insiders, the smart money, because you're still seeing prices go up around the board. This was all the fear that was back then, basically what we know of as a wall of worry. Here is your wall, and here are your worry points at each of these lows. Banking crisis, COVID, very, very big one. 2018, lots of fear in the market. And 6 years back, this sounds awfully familiar to what we're seeing right now. 2015, most of us here probably weren't in the market. My first trades were August 2010. So I started back when there was the GFC fears 2.0, because this was GFC 1.0, then 2.0, then there was the fat finger day, which was basically 2.1. It was all underneath the old all-time high, and everyone thought this was the next recession that was guaranteed to happen. Very similar to what we have seen and felt throughout 2023, where we're underneath the old all-time high, and everyone was saying, well, the market has to pull back and correct into a major recession, and has gone on to a new all-time high. So that's why I've named the video something around basically tons of recession fear, yet again, before the market keeps going up. So don't miss out on these opportunities for higher prices. Set yourself the position and keep going with the trend, keep going up. So the 6-year bull market must end. This 2009, this happened in 2015. It was a long time underneath those highs and many corrections. Have a look at this in history. It's just crazy how things repeat over and over again. There was fears in China because China had hit a all-time high in 2015 and corrected pretty heavily. Slowing growth of China GDP basically happened again, and it happened in 2021. There was falling prices of oil. Well, look at it now. We had the war, which you would expect prices to go higher. It peaked when the war was announced, I guess, in early 2022, and now oil prices have fallen 50% since that point. Back to the Wikipedia page here. So this was in 2015, mind you, about 9 years ago. It was the exact same things. Fall in petroleum prices, Greek debt default. There's always another country that's about to default, but as much as I absolutely love Greece, Greece doesn't make up much of the world trading. There's not much going on there. They export some oil, they export some olives, and they export the best tourism in the world, right? But it doesn't matter if Greek defaults in their debts, because it's not going to affect much trade that goes on in the rest of the world. You had quantitative easing in the United States, the effects of the end of quantitative easing. Didn't we just see that? And now we're starting to see the easing coming back, money printing, essentially. Sharp rise in bond yields into early 2016. 2016, UK had their referendum for Brexit, and so on and so forth. There's always some reason for these markets to collapse, and they never do. So that's what I want to talk about with the recession fears and how the markets continue to go on. Essentially, when this changes is when these fears are all taken care of, when there aren't enough fears left to push the prices down, or at least get a higher low pushed into the market. It's basically when we get into these extreme greed times for quite a period of time. And we're in this stage of the 18-year cycle. Mind you, 2015 was roughly around here. The bottom was about 2011, 2012. You came into the mid-cycle peak. So this is our 18-year cycle theory that we cover here on the channel, which is why I've still been very bullish on Bitcoin going up. And of course, real estates continue to go up at national levels, national prices. And as I said here, that's about 2015. It still had several more years to go to get into mid-cycle, which was your COVID collapse. A bit of a correction happened again, and then we were on, and we're still on until we get to this peak, roughly around this timing. Now, of course, it's a long cycle. I don't have a date and a time and an hour that things are going to exactly peak, but you'll start to see this form, especially in the charts. And that's what we cover a lot here on the channel. So speaking of where we sit and this boom before these new all-time highs, we might even get new all-time highs for the stock market this year. As we're very close now, there might be a bit of a correction. We're still in that seasonal period here in years ending in 4. Now, looking at probabilities of the last 120 years, and yes, this is the Dow Jones, it's where the most data is. Essentially, it's going to apply to the S&P 500 as well, and probably the NASDAQ once we get a few more years of data in there. But the years ending in 5, you're at a very high risk of missing the most potential of gains in those years if you're out of the market rather than in it. Now, there's no guarantee that we get this, of course. We're just looking at probabilities over the last 120 years. I'm willing to take that bet. Are you willing to take that bet with me? Come along for the ride. Have your stops in play just in case it doesn't happen. But apart from that, I think we've got some pretty good times ahead, say for BTC. We have to start being a little careful once we get into years ending in 6, years ending in 7. They don't always run out like this. And if they do, it could be a pretty significant correction along the way. So you might get a good start to the year and then a pretty bad ending to the year as well. But for now, we're just looking ahead to Q4 in 2025. Although we've got a lot of recession talk still, it seems like it's all building up again. Now, if it is building up again, this would be a prime area for those higher lows to form above previous resistance levels. So you can see we've had one area here in April, another area in August so far. We've got to get through September and October first until we hit that election month. But if this is the case, well, then this would just be another wind up before it starts to boom a little harder and possibly take out the resistance level overhead, which is essentially on a logarithmic chart, which means you could see prices skyrocket even faster than what we have currently seen them. Now, of course, possibilities are just that. There's no guarantees of them. And of course, the best thing you can do is just continue to follow your chart. And more importantly, follow your swing chart. As I said in the intro, there is a new upgrade of the TIA indicator suite, along with the TIA GAN swing indicator, which I use in all of my videos. And in this case, you can see the monthly swing chart here has been up this entire move, which essentially keeps you in the trade while the news is bad, while most people are talking about getting out of the market. You can see these swing tops and higher swing bottoms have continued to climb with the market. They haven't been broken down through this entire time. So if you're getting into a position as swing tops break or monthly bars get taken out, the tops that is, and you're trailing your stops below the lows, a very, very simple plan using the GAN swing indicator would be to continue to place stops underneath those monthly swing bottoms. Now that's at a very basic look, and we go into this in a lot more detail with members at TIA Premium. So if you are interested in that and getting on board with the sale that's going on now for our major TIA indicator suite, which we've just launched, let's carry on with the all-time highs around the globe here. While there's of course recession fears, you had the June election here for India, one of the biggest emerging markets. Yesterday just went to another new all-time high. This thing just keeps punching new all-time highs after new all-time highs. Meanwhile, the rest of the world thinks it's about to implode, or other countries about to implode. But India, again, continues to put in new all-time highs. This, even after the August fears that we've had around the world, again, new all-time highs. Now, another interesting one was Canada. So any Canadians out there watching the videos, you got another new all-time high on your stock market, even though there's plenty of fears as to why Canada's collapsing and everyone's leaving Canada. And I see those videos all the time, or headlines about that with millionaires leaving. Well, you're also seeing the stock market booming as well. Of course, those same reasons come up. Well, everyone's money printing. No shit. What are you going to do with your money? If you just hold on to it and you're selling out in the hopes of a collapse or a crash, or you're just sort of fearful of putting your money into assets, that money in your hand or in your bank is just eroding away because asset prices keep going up. Everything around you is getting more expensive to buy. And so that's what they're doing. That's what the governments are doing. The central banks are forcing your hand to go and buy assets to get that money circulating in the economy again. And then they try to take some of that back in terms of taxes. So the more times you're spending your money, the more taxes come through. Asset prices continue to go up. until they don't. And like we're seeing here with Canada, they're at new all-time highs. Now, Australia has just opened and we're on the verge of another new all-time high. Just opened it a couple of hours ago. We're just a fraction of a point away from another new all-time high here, 81.48. And currently live at the moment, it's at 81.43. So 5 more points to go, another new all-time high. So for Bitcoin and cryptos, where are we at? Still enough fear, healthy fear in the market while Bitcoin has been climbing, now at $58,000. So here we are, 21% away from a new all-time high. Well, measured down, that would be the losses from the absolute peak. But from the current price, roughly about 27% back to a new all-time high. And from the low, Bitcoin's price is now up 18.5% to 58K. So in terms from where we were yesterday, the good news here is that we're getting multiple closes above 56K. That was a significant 50% level. So again, as I've talked about with the 50%, above that level is strong, below is weak. And just clearing the chart up a little, we'll remove this 50% level that it needs to get back above, which is 61.5, and just show this particular run here from January to March. 50% and the pricing underneath 56K has been very, very short-lived. You had the one fear here in July, got back above. You had August, major fear there, back above. We had September, where everyone thought the market was imploding again. That was just last week, actually, last Friday, a week ago, where it dropped to 52K. And again, it seemed like things were absolutely over and it was the end of the world, for want of a better word. But now we find ourselves at 58K and again, spending some more time above 56. So it really does seem like 56 has been a critical level of support for BTC. So let's throw the other 50% back in. The main goal here now is for Bitcoin to get back above $61,500 and spend more time above that level. I suspect that's the game over the next 1 to 2 months for BTC, while it consolidates above 56 and then moves its way back to 61 eventually. Of course, we could get rejected here and come back down and test the levels again because we're in a trading range. But nonetheless, I still think that is going to happen based on everything I've talked to you about already in the video, with the stock market's going to new all-time highs, the S&P attempting to get back there probably in the next couple of months, real estate prices up, and everything's still moving to higher prices. I suspect Bitcoin is going to come back over Q4. So that leads us over to the cryptocurrency market, and on our weekly swing chart, nice move up here, hitting 2 trillion on the total cryptocurrency market cap. The level to beat still 2.2. We can see back in August, once we had the bounce out of the Japanese yen carry trade low, was rejected at 2.2. So this is still on the chart. That 2.2 level is still the key there for the total cryptocurrency market cap for more strength. If we do get this low form here at 1.8, that would be one of a pretty significant higher low that could be forming. And the next target, of course, 2.2, and then a break above the swing top at 2.24. If that's all positive news for Bitcoin, what's left for altcoins here? Sitting above 400 billion is a pretty good sign. And this market actually has been probably one of the better gainers here. So I'm on the weekly chart. And that particular, well, the week we're currently in, the percentage move is roughly about 9%. So it's one of the bigger movers in the market. So we're starting to see more money come back into altcoins. And in terms of the weekly chart, you can see here with the total crypto market cap, which is made up mostly of Bitcoin, ETH, Solana, stable coins, it hasn't broken above last week's top, whereas the total cryptocurrency market cap, and this is exclusive to TIA because it excludes BTC, ETH, and all the stable coins. It has gotten above last week's swing top. Should it close here, like if this was the end of the week, it would now be above the 50% level again at 400 billion. So that's a pretty good sign that it's attempting to put in a higher swing low here at around $360 billion. So that's good signs for altcoins coming up in whatever next phase we get in, whether we start to push to new fresh highs or you start to see some of the stronger altcoins forming accumulation and consolidation patterns before they potentially break out. So this is your accumulation or consolidation pattern until you know it's accumulation. You know it's accumulation once it breaks out, because it could break down and then that would be classed as distribution, basically selling. But this was confirmed as all buying because the market broke out to the upside. So it could be in the early stages of that once again. The pricing is almost back to that April low. So this was the time where I was looking at some altcoins putting in higher lows and other altcoins had continued to fall from that point. So even though some altcoins have broken down from that April low, they're getting back to that April low price, which is a really strong level for many of these altcoins to be in. Now, the main thing I like to use is the swing indicator because it allows you to see quite quickly and easily where those levels are, along with giving you entry targets and then stop loss targets to get out of the market in case you're wrong. That's the swing indicator. The guys in TIA Premium are using this to make gains every single day. So this is for their trading here. 100% on Aave, that was another good call there. CAS has been doing well. BTC has been doing well. FET has been doing well. And SUI on the trades here. So I thought we'll have a look at a couple of alts, starting with Solana. I'll get across to CAS as well. Solana has been doing relatively well to continue to maintain strength above 50%, above this $109 level. That's from the low to the current top at 210. So back into that 50% at 109. Ideally, the next target is 134, so weekly closes above 134, and then to 160. So if you wanted to use this in trading, you'd look for entries above swing tops and then continue to ride each of the swing lows with stops underneath those levels. For example, coming out of that October area there, the swing top is at 25 bucks. You'd be entering above that level. And then as you see these markets pull back, which is still pretty difficult. I'm not saying it's the easiest thing to do. This is trading, remember. If it was easy, everyone would be multi-millionaires in trading. You would see your portfolio run up to the peak here, but then it corrects. That is the place to put the stop next on this correction. Then you see it run up again, pull back, you move the stop to this level here. It runs up pretty significantly. You could take some profits if you wished, but just following a mechanical plan, you would then set your stops below the swing bottom, again below the swing bottom, and again below the swing bottom here. And at this point, once the market breaks past that swing bottom, that's where you would take all your profits because the trend is getting ready to change. Now, of course, you'd say, well, I missed out on all of this and I didn't get in at the exact low. Well, who does that? I don't know anyone that buys the exact low and sells the exact top. If you are able to make some profits through the middle, a nice 4-5x there, well, then you're doing better than 95% of people out there in the market who will say they do that, but or say they get the 10 or 50 X's, but majority of the time you're just watching your portfolio do those 10 or 50 X's in paper profits, and actually taking the physical profits is a different story. So if you went through that in 2023, 2024, this might be a great tool that you can implement to your trading toolbox to make sure that you at least take some of those gains the next time this comes around. Because as I've been looking at, and I mean, maybe I'm convincing myself of this, I think we're in this wind-up phase before we get another leg out. And when you do get these big moves, they're typically much cleaner than the trading range, the choppiness here when you're in a trading range. Trading ranges are much more difficult to trade. The trend is your friend and they're much easier to trade. So why not make it easier like Warren Buffett says here? I look around for 1 foot bars that I can step over. He doesn't try and jump over the 7 foot bars, right? So if you're trying to make shit difficult for yourself, it's just going to be more difficult. Maybe you get less profits, more losses. If you make it easy for yourself and just ride the trend up until it changes, well, you're just jumping over 1 foot bars. Now, this particular tool was developed over 100 years ago by Gann, which is why we call it the Gann swing indicator. And you can see that it happens every single time a market breaks out into new fresh highs. The trend becomes much cleaner and easier to follow. You can see the swing top here. The market was about to break out in January 2021. So we just measure from that point, put a stop at this low here and keep riding it up. Stop goes in here, ride it up, stop goes in here, ride it up, stop goes in here, and then it corrects. So you get out at that low. Well, this is the early days of Solana, 1400% there. So there are the bigger gains. And of course, the market goes in reverse. Now you can use it in reverse as well. Low to low to low to low. And you get a breakout point here where the trend changes. So 41% to the downside. So that's a brief mini masterclass on how I would use the Gann swing indicator for trading if you want to ride the trend up in another cleaner, easier bull market. And you can also use it in the bear markets on the way down when you just see the trend pick up steam and start to break down from the lows to the next lows to the next lows. On to CAS now. Let's have a look at another altcoin here, which is maintaining its strength, holding above the macro 50% level all the way from the low to the current all-time high. And that price comes out at 10 cents, currently trading at 16.6 cents as it attempts to overcome this correction 50% level as well. This entire period, it's put in higher lows. I'd be concerned if it broke down from roughly 9.5, 10 cent level because of these lows at that it put in on the way up. So if it was to break around here, well, then it's got a bit of ground to cover on the way down. So you could end up with some clearer trends to the downside. Otherwise, at the moment, if this does continue to hold up in the stronger half of the macro 50% and the shorter term 50%, this could be on for another significant run to the upside. So on a day where Bitcoin's up 18.5% from that fearful low, still talks of major recessions around the world. Meanwhile, markets are going to new all-time highs like Canada, India, and potentially Australia. It would seem pretty ridiculous to be sitting on the sidelines and doing nothing with your portfolios. Stick around on the channel, hit that subscribe button if you haven't already, and of course, like the video up. Have a great weekend, and I'll see you back here at the next video, potentially in Bali or in Singapore if you're going to token 2049. I might see you over there in Singapore. All right, guys, take care and peace out.